Welcome to the WTR Small-Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I'm being joined by James Gernetzke, CFO of Exodus Movement, Inc., NYSE AM, ticker symbol EXOD. Exodus is a financial technology leader empowering individuals and businesses with secure, user-friendly crypto software solutions. Since 2015, Exodus has made digital assets accessible through its multi-asset crypto wallets, prioritizing design and ease of use. With self-custodial wallets, Exodus puts customers in full control of their funds, enabling them to swap, buy, and sell crypto. Its business solutions include Passkeys Wallet and ExoSwap, industry-leading tools for embedded crypto wallets and swap aggregation. Also joining us is my WTR Managing Director and Technology Equity Research colleague, James Kisner. Good morning, gentlemen, and thank you for joining today's podcast.
Morning.
James, for those new to the Exodus story, can you please give our listeners a quick overview of your business model and investment thesis?
Yeah, absolutely. So Exodus was founded back in 2015 in the crypto mecca of Nebraska. Our two founders got together and they basically in late 14, early 15, and they basically had three things that they wanted to focus on. The first was an amazing user experience, and so back then, especially back in 2015, I always like to say it's like the Matrix. The ones and zeros. A normal person couldn't read it. You had to be a real pro to do anything with crypto. And so they wanted to make it, something that was very simple, Apple experience like, and with that, so obviously a great UI UX, but also with that, they wanted to have a great customer support. So we have industry leading customer support and always have. With the idea that, if you run into any problems, with crypto, you want to be able to talk to a human because it's your money and it's very important. So that was the first principle. The second one was self-custody. After the financial crisis, people really didn't trust like the Lehman Brothers of the world and, centralized institutions. And then in crypto, it's not just TradFi in crypto. There was, Mt. Gox, which for those who aren't familiar, it was an exchange like Coinbase, where it was centralized, but they got hacked and a lot of people lost a lot of money. So the idea was put the power, in the hands of the people and let them have the keys to the coin, let them have the ultimate control. And Exodus, won't touch the money. It'll be a truly self-custodial experience where the user has the power. And then the third item was multi-chain. And the reason for that was back in 2014, there was ICOs and a lot of the new coins that you're familiar with now were starting to come out. And the founders looked at each other and said, well, how many wallets do you have? Well, I have 8 wallets. How many do you have? I have 6 wallets. And so, the reason was you needed one wallet for Bitcoin and another wallet for Ethereum and another wallet for Doge, et cetera, right? And so they said, that's a horrible experience, back to point one. Let's put it all in one place. And so they started with the multi-coin wallet. And then from there, it was like, okay, well, how do we monetize? And the idea was, a guy named Eric Voorhees from Shapeshift came and said, hey, if you send your users to our exchange, we will provide you basically a referral fee. And so with that, basically that's how we monetize. And to this day, over 90% of our revenue is from our exchange aggregator. We've taken somewhat of so we've built a great wallet and a large user base that has been, for the first 9 years was, the vast majority of our revenue source. In the past 12 months or so, we have basically taken an AWS model and taken a lot of the things that we've built internally and started offering them to others in the industry, similar to an AWS model with, primarily our first place is ExoSwap, where we've taken our cross-chain exchange aggregator and sold it to others like Ledger, MetaMask, and Magic Eden.
Oh, so awesome. That's a great overview. And with that, I'll turn it over to James Kisner.
Thanks, Tim. So your presentation highlights over 23 billion exchange volume since 2017 and 1.7 million funded users. What do you see as the biggest growth drivers behind this momentum?
Yeah, it's a great question. We see, well, there's a lot of different things. First and foremost, it was in, as I described, the wallet and that amazing user experience. So, we've seen a lot of organic growth in our history as people, tell all of their friends just about how, wonderful of an experience it actually is to use the Exodus wallet. And with that, just the crypto market, as new coins come into play and new chains get developed, Exodus is kind of a Switzerland. We've never said this Ethereum is going to be the best chain ever, and you should only use Ethereum. We've have 40 different networks that we support. And because of that, as the market cycles go on, I mean, I remember going to conferences in like the span of 18 months. I'd go to a conference in January, and it's Bitcoin maxis, and Bitcoin's going to rule the world. And then 6 months later, oh, the tides have turned, and now Ethereum's going to rule the world. And then 6 months later, the tides have turned again, and Solana's going to rule the world. Well, we're not trying to pick winners. We're trying to help the entire community, and because of that. You see Bitcoin, for example, just in the past few months has been fairly flat, but Solana and Ethereum have taken off. And so we're well positioned to support, whatever moves, wherever the market goes, whoever ends up being the winners, in the overall digital asset game.
So how does Exodus differentiate itself from other crypto wallets and exchanges in terms of user experience, security, and functionality?
Yeah, our focus is primarily on that self-custodial aspect, and because that's where our focus has been, it really has allowed us to expand a lot of different functionality and a lot of different geography, right? Because what we do is we don't do a lot of, say, the regulated activity. So the actual swaps, for example, like we're not an exchange. We don't do the swaps right now. And because of that, we had to build an aggregator that has 11 different exchanges in it. And because of those different exchanges, it gives us a lot more functionality than one individual exchange, for example. So in Coinbase, for example, it doesn't operate in a lot of jurisdictions. So if we wanted to plug them into our aggregator, they wouldn't be able to function in a lot of different jurisdictions. So we'd have to add more more exchanges to the aggregator to have that functionality. Coinbase doesn't support all the chains and all the coins in their swaps. So, we had to add numerous different exchanges to cover different chains, different individual coins, etc. And so because of that, if some new product comes out that, the community and our users really want, we're able to go work with a company that's already built that product and essentially just plug it into our wallet experience.
Okay, yeah. So you mentioned, self-custody. You guys support self-custody, trading, staking, and payments across, I think, 40 plus blockchain networks.
Mm-hmm.
To the extent that you can talk about it, what new features or capabilities are on the roadmap?
So we haven't necessarily called out a lot of the individual features yet, but what we have talked about is especially around things like stablecoins, right? And so the experience that we're building is, with the Genius Act and everything else, the experience we're building is we see a world post-Genius Act that there's going to be a large proliferation of stablecoins on a lot of different networks. And so people don't necessarily understand that the two biggest stablecoins right now is Tether and USDC. And those chains, what people don't realize is that those coins are actually operate on a number of different blockchains. So, for example, USDC is on Ethereum, it's on Solana, it's on Algorand, et cetera, and the list goes on, and probably about 10, 15 different chains. And Tether is also the same way. And right now, we already have support for all the major stablecoins and on all the major chains, and in most of the minor ones as well. Like there's not a stablecoin that I know of that we don't necessarily support. So. And we already offer with that aggregator that we've built, we already have created something that allows you to go from USDC on Ethereum to Tether on Solana, for example. So we're already Switzerland. We already support all the movement back and forth. So we've already built a lot of this. Plus, with our passkeys technology, we've built easy on and off ramps. And so what we see is someday, most of the world will have wallets because people don't realize that stablecoins require a wallet to use. And so we believe that as this proliferation goes on, that everyone in the world will have a crypto wallet, whether they know it or not, and they will be using stablecoins to make their payments. And what we are creating is something where I always say like, James Kisner, you are not as cheap as I am. And so let's say I owe you money. Well, you typically use Amazon coin for your daily purchases, but I'm cheap and I shop at Walmart. So I usually use Walmart coin for my purchases. So if I owe you $100, I'm going to send you $100 of Walmart coin because that's what, I operate in regularly. We're creating an experience where you receive that Walmart coin and you don't even necessarily know that it's Walmart coin on Ethereum, for example. You just see $100, and then you'll be able to pay someone with Amazon coin, and you won't even necessarily care if it's Amazon coin. You probably do because you're a big Amazon guy, but you'll be able to send that Amazon on Solana without any problems. And so that's like the overall experience we created. There's a lot of moves in the marketplace right now around remittances and merchants, but we really see the opportunity around that final mile, if you will, around the broad consumer base, end users, the mass market, if you will, of people that are actually going to daily interact and use stablecoins to make their payments.
Great. So you mentioned the Genius Act. This is kind of down that path. So your presentation mentions expanding market and regulatory tailwinds. What policy or regulatory developments are most supportive of your growth strategy?
Yeah, so I think there are a number of them. I mean, first of all, just um, I think our legal bills are going to go down quite a lot just because, we're now listed and, we don't have to explain the craziest amounts of things as we go through our processes. And just the Genius Act is, obviously that's the world that we see and it's going to proliferate. But beyond that, just the regulatory clarity around, digital asset trading, we think that's going to open up a lot of opportunity just in the United States. Just the clarity there. It's interesting, as I've traveled around the world and talked to different investors and different companies. It's really interesting to see just how the U.S. under this administration has essentially leapfrogged a lot of the rest of the world. For the last 4 years, the U.S. has really been behind others in regulating and understanding and taking a common sense approach to crypto regulation. And I think under this administration, you've seen from the head of the SEC to the CFTC to others in the administration, you've really seen the idea to take a common sense approach, and that has opened up a lot of the world. And I think a lot of the world is now looking at the U.S. as the likely leader in crypto assets, just because of the common sense approach that this administration has taken to the regulatory environment.
Yeah, that sounds great. All right, so let's shift to growth here for a second. I mean, you reported, I think, 127 million trailing 12 months revenue, and it's been a high margin, capital efficient model. So, how do you plan to sustain or accelerate your growth going forward?
Yeah, so the beauty of our business is, most of our costs are I'd call it semi-fixed, right? So salaries, even if we wanted to hire, double the size of the team, that would take a lot of time. But we don't need it, right? I mean, we're a tech company, so we have a lot of folks in engineers and product folks, and then obviously our customer service. But with AI and everything else, we don't need to make robust headcount changes to have a massive impact. And that's our primary expense, obviously, as a tech company. And then after that, you've got cloud services. And that also doesn't, even if we add a lot of extra users, it scales very well. So our base business, is very highly scalable. And then you look at our variable expenses. We have in the last quarter, I broke out our expenses and we talked about marketing expenses and then, also some, legal costs related to the acquisitions that we're working on. So, with that in mind, we are able to, basically lever up, use those levers, pull those levers and increase expenses around marketing for growth. So as we find, areas of marketing that drive growth, we can pour fuel on that fire and up that. Or we can tone it back. Like if we're not seeing the results we want, we can pull that back in those areas. And similarly for acquisitions, right? There's nothing forcing us to do acquisitions. We have been cash flowing for many, many years. We have a large treasury and no debt. So we really are able to be opportunistic on all different growth fronts.
That's great. So, you again talked about being diversified across, different, crypto assets. I'd like you to look in your crystal ball and think about, can you talk about, your revenue diversification across Bitcoin, stablecoins, and other digital assets, and how you might expect that mix to evolve?
Uh, that's a very tough question because the crypto market, if you could say anything about it, it's dynamic.
Right.
And the new use cases, I mean, just look at a lot of these chains that folks in the industry are coming out, like payment focused chains, like Stripe. I've heard they're starting a chain. Coinbase, they have Base. Kraken has created a chain. And so, I think that, we definitely welcome these developments because, we are very good at adding chains to our platform and supporting, being essentially the Switzerland. And, so we can see who ends up winning and we'll support all of them along the way. Multi-chain, I talked about it as one of the things that we've, in the very beginning, I talked about that, we focused on multi-chain. Because of that, it's actually I need to be a little bit more careful is not the right word, but I need to not talk about multi-chain is make it sound as easy as I do. One, because I'm not actually a programmer, so I'm not actually doing the work, so I do a disservice to the guys and gals that actually do that work on the team. But two, because it's actually very, very hard to be a multi-chain solution. So that's really one of our advantages is as these new chains come out, we are uniquely positioned to be able to add them and support them. Where others, I mean, an example that I typically give is back in the days in 2021, we supported Doge and Coinbase didn't. But then Elon Musk started tweeting about it and the world went nuts for a while about Doge. And so Coinbase decided to add it. It took them 6 months to add Doge to their platform. 6 months, one of the biggest crypto companies in the world. And that's just like a prime example of how challenging it is to actually be, to have and build a multi-chain solution and maintain multi-chain. So, I hate to, so I need to be careful. We make it look easy, but it's very, very much not.
Okay. So, given your balance sheet, you've got, I think, 291 million in cash, Bitcoin, and other assets. You got no debt.
Mhm.
What is your capital allocation philosophy for growth versus shareholder returns?
Yeah, so we are, obviously we see growth. The balance sheet growth is just a function of our operations. We are not a digital asset treasury company. We're an operating company that has created a lot of digital assets. So I think people don't realize about Exodus is 2/3 of our revenue comes in Bitcoin, and then our salaries to work at Exodus, you have to take Bitcoin as payment for your salaries, right? It's a great gating factor. If you want to work at a digital asset wallet and you won't take digital assets as payment, that's probably a sign that you're not a fit to work here. But what that has done is over the years, as we've had revenue that's exceeded our expenses, we've been able to grow quite a Bitcoin treasury. And so, we've been very public about acquisitions and about leveraging that our both our status as one of the few but growing list of public companies in crypto, as well as that balance sheet to fund acquisitions. With the idea that we would want to, if we use 100 Bitcoin to buy a company, for example, we're going to want to make 120 Bitcoin in a certain period of time, right? So that's always how we're looking. We're looking at growth by acquisitions, and then I think I mentioned earlier, as we look to grow the base business through marketing, et cetera. We're just in a very good position where as we see things start to take off, we can throw fuel to the fire, or if something, the world's not perfect and sometimes things don't necessarily work, we're able to easily and quickly reduce those spending in those areas, as we move towards as we move through the current environment.
I'd love to double click a little bit on that comment on acquisitions. Perhaps
Sure.
you could say a little more about the kind of targets that are kind of most interesting to you, like is it technology, to drive, is it user growth, geographic, reach, like, any way you can kind of handicap the different criteria that as you think about acquisitions.
Yeah, I think first and foremost, we're looking for strategic acquisitions, right? We want companies that will add functionality, licenses, whatever it is, we will we don't have readily available in our roadmap, that accelerate our roadmap and get us closer to where we want to be. And that does leave open a fairly wide swath of companies. And so, the team has obviously been very busy, looking at companies. And, at the same time, that could also lead to, if we have a company that fits that criteria and that also has revenue and users, I mean, that's obviously great. If we look at some of the public, areas where we've, been looking to do acquisitions, I mean, there was a good example of it to kind of give folks an idea of what we've looked at. We had there's a Canadian listed company that went through a process that was very public. And they were a fiat on-ramp. And so they had licenses around the world. And so, when we went to look to buy them, what that allowed us when we participated in that process, if you will, the reason we went after that was because they had licenses around the world. They had the technology set up to move money between bank accounts and also, sell crypto for fiat and go back and forth between crypto and fiat. And that is something where the one thing about our business model is we don't control those rails right now. And so if a user has a challenge, with one of our providers, because we don't have the licenses, our customer service is forced to send them to the provider to solve the problem. And, that's just not necessarily the experience that we want. Plus some of the things that we're building and some of the different payment rails and things of that nature that, we see in that vision for, that stable coin of the future where you have a wallet and you don't even know you have a wallet. There's some of those things. It would have been just more beneficial for us to, handle some of those interactions and transactions ourselves. So that was kind of an example of something that was a strategic fit that we looked at. But there's a lot of things. I mean, the beauty of crypto is it's like I said, it's a very dynamic industry, and so there are a lot of strategic areas for us to look at.
Great. All right, one more. It's kind of a longer term question, two parts. Okay. So, how do you view the long term opportunity for stablecoins and tokenized assets in modernizing financial infrastructure? And as tokenization of real world assets likely accelerates, where does Exodus fit in the broader Web3 and digital finance ecosystem over the next, say, 5 to 10 years?
I think that the world right now is primed for, again, it's similar to that regulatory. I think we'll see how the U.S. is somewhat leapfrogged the rest of the world in a regulatory perspective. I think that in terms of technology and in terms of technology around, financial institutions and government institutions, regardless of any particular area. So whether that's stocks and the fact that, you have so many intermediaries from the DTC to brokerages to exchanges to custodians, or whether that's car titles. There's the NFTs is a great use case for car titles and anything like that. So I really believe that over the next 5-10 years, you will see real world assets. You will see the people have been talking about it for a long time, and in fact, Exodus has had a common stock token since 2021. We were the first publicly traded company to have a common stock token. So we've seen this for a long time, but I think the pieces are finally in place now where you're going to see a rapid acceleration of real world assets, tokenization, coming online. And I think, stocks is one, just the stable coins is another. And what it'll do is there anywhere where there's a centralized institution involved that was set up primarily because of the way the world was in the days of paper. I think that the technology will cause so much efficiency that the parties that have slowed the progress will be essentially they'll just be relegated to the wayside. So think, say, digital film to digital cameras, or think of newspaper want ads being the primary revenue source for newspapers, and then Craigslist came along and completely disintermediated. Entire industries will be disintermediated, and I think you'll see new industries crop up around it, of course, but there's I think that you're going to see that level of change coming with real world asset tokenization, similar to, like I said, newspapers and Craigslist, or, Polaroid and Kodak, and then the proliferation of digital cameras.
Great. Thank you for that. Well, I'm going to go ahead and hand it back to our host, Tim. Go ahead, Tim.
Thanks for joining us today, James Gernetzke, CFO of Exodus Movement, Inc., NYSE AM ticker symbol EXOD. And thanks to my equity research colleague, James Kisner, for also joining us today, as well as a special thanks to the producer and editor of the podcast, Joe Brunetto. Thank you for listening. Don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast.